Welcome back to the channel. Hope you're all doing well. Happy Sunday. Sunday's this week in crypto. Welcome to Crypto Bullseye. We're going to be going over the last 7 days in crypto. We'll be looking at technical analysis. We'll be looking at news stories. We'll be looking at Spacex accepting Dogecoin, why investors are going into gold-backed stable coins and cryptos. We'll be looking at the dollar index, and then towards the end of the show we'll be doing giveaways. So lots to talk about today. Let's get into the show. Right, we'll get straight into the news, and this is an article from the Cointelegraph. I'll leave a link in the description below if you want to read it in full. I've highlighted a couple of key points within this, starting with SpaceX to follow Tesla in accepting Doge payments for merchandise. So just 4 months after EV manufacturer Tesla started accepting Doge payments for the merchandise purchases, Elon Musk announced his plan to extend the payment option for his space exploration company SpaceX. So Musk, the CEO of SpaceX and Tesla, has been a staunch supporter of the Doge ecosystem since 2019 and has since publicly revealed interest in accepting meme coin payments across his multi-billion-dollar enterprises. So historically, Musk's pro-Dogecoin tweets have had an immediate and positive impact on Doge's market price as investors try to cash in on the hype. However, the recent revelation about SpaceX's plan to accept Doge payments for merchandise had no significant effect on the price amid a bearish crypto market. So you can have a look at the Dogecoin chart now, and you'll see that since May 2021 we've been in a downtrend, so it's been bleeding quite a lot heavily. And whereas Musk did this previously and managed to move the market up with his tweets and a huge run for Dogecoin, in a bear market where we're making the downtrend, he can't really move the market as much as what he could. It's going to have to be something substantially more than SpaceX accepting Dogecoin for merchandise for this to run hugely in a bear market. So that's just my thoughts on that. The next thing that we're going to look at is why investors are going into gold-backed cryptocurrency. So we'll have a look at that now. Right, okay, the next article is on Yahoo Finance, and I'll leave a link in the description below, and this is stating that investors cling to gold-backed cryptos following massive market crash. So we all know that we apply good risk management. A diversified portfolio is something that we teach on the channel to you guys. Let us know what you think as far as gold-backed cryptos are concerned, whether it's from a stable coin perspective or a cryptocurrency perspective. Let us know if you're invested in any gold-backed cryptos. But what I want to show you is just this article, and you can see why people are looking at these and looking at different ways how they can protect their portfolio in bear markets or times of hardship. So on May the 7th, we all know, we've talked about this a lot, that the Terra USD, or UST as far as the ticker's concerned, stablecoin, which is supposed to maintain a $1 peg, started to wobble, and the price of the then 18 billion algorithmic crypto crashed to as low as 35 cents on May the 9th. So the Terra Luna network witnessed a catastrophic failure within days, and it gives an example of a guy here, Sam, who had 5,000 worth of loss of his savings as a result of that. So with recent geopolitical tensions and crypto sell-offs came extremely fragile, crashing below the $28,000 level and bringing down stock prices. The world's largest crypto by market cap is struggling to catch up above the $30,000 level. So as a result, investors are fearful about re-entering the crypto market despite its higher returns in the past. Investors rather do not want to take any risks and look into newer variants of stablecoins backed by real-world commodities such as gold. So we can see that after the UST, the Terra decoupling, where it got decoupled from its peg and went down from $1 to 35 when it was supposed to maintain the $1 peg, people are fearful of that, where they thought it was a more safer asset because it's supposed to be what they call a stable coin. They're fearful for that and are looking for commodity-backed projects now going forward. So things such as gold that are backed against a token, and these are boasting that not only do you get the gold that's backed against the token, you also have a log that the gold's stored in a vault. So as a result, investors are fearful about re-entering the crypto market, and it's saying some of the gold-backed projects have promised stability to investors on the crypto front and have kept up their word. For instance, Paxos Gold, and we'll have a look at that in a second, a digital token backed by physical gold, offers its investors not just the tokens but also the underlying physical gold itself, which the parent company stores in vaults. So are these tokens the way forward? It's saying it's been proved that gold is a protective hedge against inflation and a better alternative for crypto lovers who wish to invest in a stable and safer option when compared to fiat-pegged stablecoins. So experts like Timothy Ord, who's the president and the editor of the Ord Oracle, predicted that gold stocks could see 10x gains in the next 3 years. Additionally, Wall Street gold estimates are also bullish for 2022. So analysts at Goldman Sachs have recently hiked their forecast for gold prices, predicting the metal would hit around $2,000 to $2,400 an ounce, which is up from $1,950 previously. So like I say, I'll leave a link in the description below, but I just want to show you guys what the Pax Gold chart looks like and the reasons why investors, or why I think investors, are likely to use this as a hedge. So you can see that it's been trading highs of 2,101, and this has gone back to August, September 20, and lows of 1,689. So there's not as much volatility in there, and this is represented by this sideways range. And if you have ranging markets like this, which stay ranging for a long period of time, this is your hedge against the higher risk volatile assets. So if you had a percentage, and I'm not saying go into Pax Gold, I haven't done my research on this, it's something that I am going to be looking at, and I'll let you guys know what the research finds, but I'm not looking into this project yet. But if, just as an example, if you go into a sideways ranging market, you can diversify and manage a well-balanced portfolio without having the downside that crypto leaves if you are fully 100% in the market. So that's the reason why I think the investors are looking closely at these, and that's one of the reasons why we'll be looking closely too. Right, we'll have a look at the Dixie next. Right, the Dixie or the DXY, strengthen the dollar. This is what we want to find out as to whether we think that the crypto markets are going to run. When the dollar rises, the crypto markets tend to go down. So we'll see that the US dollar index DXY continues its downward trend on Friday after a slew of mixed economic data from the United States. The index declined to 101.6, $101.60, which was the lowest since April the 25th this year. It's fallen by more than 3% from its highest level this year. So mixed US economic data, saying that data published this week presented a mixed picture about the American economy. On Friday, data showed that inflation slightly declined in April, even as consumer spending jumped. So according to the Commerce Department, consumer spending rose by 0.9% in April. This spending increased as the savings rate declined to 4.4%, the lowest level in almost 15 years. As such, this is a sign that many Americans are tapping their savings to offset the rising costs. At the same time, inflation as measured by personal consumption expenditure, or PCE, declined from 6.6% in March this year to 6.3%. This rate is still near its highest level since 1982, so 40 years, but the small declines movement in the right direction, that they say. The daily chart's shown that the DXY index has been in a spectacular sell-off this week, so we're in a bit of a downtrend at the moment. It's now trading at, that's actually 101.6, a bit of a misprint there, which is along the upper side of the ascending trend line. The price is also between the 25-day and the 50-day moving averages, whilst the relative strength index is pulled back. Therefore, while the chart seems bearish, there's likelihood that it will resume the bullish trend since it has formed a break and retest pattern. If this does happen, a retest of its year-to-date high at 105 can't be ruled out. So we'll have a quick look at the charts on the Dixie and see if we agree with that analysis. So you can see this is the downtrend that the article was talking about, and this is on the weekly chart, so each candle is represented by a full week. We're closing in on this week at $101.63 or in the region of, and we're looking at, is it likely to pull back further to give the cryptocurrency market and other markets a chance to run, stock markets, tech, the other markets a chance to run whilst it has its pullback, or is it going to run further? So we could stick a Fibonacci on there and see if there's any important levels. So swing high to swing low, and we're looking to come back and test the 236. The 236 is sitting at 101.20, 101.32, and that's the first area that I'll be looking to see if price action is going to get a reaction on that. We've been in quite a strong uptrend, and if you zoom out slightly, you'll see that one important level that we have managed to create, close and break above is the 103.85. Last time that we had highs of this was back in December 16. It's quite a long time ago, and that was signaled by a bull run previously. So it's broke and closed above that important level. We're now seeing a pullback, and it's whether we're going to get the deep pullback down to the 0.5 levels, the 0.618. You may actually come back to here, test the 200 moving average, get a reaction from that and continue the run up, or you could get more of a shallower pullback, see how we react at these levels and the 382 level, which is an important level, and move up, break and close above. If that does happen, it's possibly going to have a negative effect on the rest of the market. So we're looking at the Dixie at the moment. Important level to hold is going to be the 101.63. We'll see how that does, and we'll see how that does next week. Ideally, we want a deep pullback, give the markets a chance to run, have their recovery bounce, and see how the Dixie runs after that. So that's the Dixie, guys. We're going to look into some technical analysis next. We're going to go over some layer ones. We're going to have a quick look at Bitcoin, but first I just want to thank all our new members, all our new subscribers, all our existing subscribers. Appreciate all your support, appreciate all your comments. Thanks very much, guys. If you're new to the channel and you do like the content that we provide, give us a thumbs up, share the content with your friends, and hit the notification bell. We do crypto emergency updates as well, so when we think that the market is changing, or there's doubt or panic in the market or uncertainty, we're going to try and get videos out to you as soon as possible. So hit the notification bell and you'll get notified as and when that does happen. Right, we've got some technicals next, starting with Bitcoin, and we've got Bitcoin here on the daily chart, and we're still trading in a range where there's no decision being made as to which way the market's going to turn. So we're just going at probabilities now and see what clues the price action gives us. And you can see that there's a couple of things here. This area here is still held, and if we do get a break and a close below there, the next level that I'm expecting to be testing is 24,000, which is not a strong area of support. The strong area of support comes back down here, which is the 20,000, and that's represented by the previous 2017 all-time high. So with these patterns, as we've spoke before, you're trading in a downtrend, you're making lower highs, you're making lower highs, you're making lower highs, and these buy orders here, again, eating up until you get to a point where there's either none left, or you get a bit of strength in the market, a bit of volume, and you can start making moves to the higher side. So as we've said, a break and a close above 33,624 would show short-term strength in the market, retest, and we can come back and test the levels of 35,000. So we've got a lot of confluence, a lot of ceilings to get through, a lot of resistance to get through to the upside, and the patterns are showing us that there's a higher probability of moves to the downside. We just need to look for those clues, and the clue that I'd like to see for the upside would be that higher high, higher close candle following a breakout of this wedge. So let's keep an eye on Bitcoin. Like I say, it's pretty boring at the moment. Ethereum, pretty similar, making a bit of a divergence here with the stochastic RSI. So we're coming from, or we're nearing another sold area on the RSI, and price action's making a negative downturn while the stochastic momentum is making an upturn. So we might see some short-term strength in the market and come back to test the levels of 1,917 if we do, but we haven't decided whether we've made a base at this level here. It is strong support represented by the lows of mid last year, 22nd of May, June, and July last year. We had three tests of there where the bulls had so many buy orders that it pushed price action straight back up and the run could continue. But there's a lot more weakness here. We've got the strong bearish candles, the full red bearish candles that's pushing price action further down. So weakness in the market at the moment, but if we do see short-term bounces, those short-term bounces can be quite high in percentage-wise. So short-term bounce in Ethereum to test these previous lows from here, nearly 20%. Have a look at Solana next. And with Solana, we said before that when you have a run like this, you don't get a chance to build up the levels that you would like. So if you can build up support and resistance levels here, or you have your pullback down to your 618 region and build up levels at here, they come back and they'll act as support at a later date, or if you're trading in a downtrend, they'll act as resistance at a later date. But because those areas weren't built up during Solana's huge run, ultimately when price action comes down, it doesn't have any sticking point. So it falls straight through this whole area here. It fell straight through there. There was no support or resistance being built up at these areas, and Solana felt it. So we've been in a sideways range now for some time, and we fell through that sideways range, and this is the area here where I'm going to expect the next resistance. So we need to make a base, see if this acts as a double bottom and we get a higher high, higher close candle, some kind of reversal, perhaps a bit of volume to tell us that it's going to try and make a short-term bounce. Then this is the area that I'm looking at, the $75, $76 region. Very similar with AVAX. Very similar with AVAX, you've got the divergence too. Short-term bounce in AVAX. .85% to the previous swing low. It's a previous major swing low, so it's nearly 100%. So quite a lot there to the upside if you do manage to get a bit of confluence. So it'd be nice to see a break out of this pattern here, and then a high above 37.89. A little bit of additional weight to say that we're going to start making a little bit more strength and move to the upside slightly. Right, last Cardano. Very similar to AVAX Cardano, to the upside from where current price action is standing. You've got a 55.9% increase there, and that's going to test as major resistance, 74 cents region, currently trading at 47. So again, what I'd be looking for here is price action to come back down, this to act as support, and for the buyers to push it back up. You get your higher high, higher close candle, and then we can come back and look at retesting these levels here and these levels here. So that's the market, guys. We'll have a quick look at NFTs next. You've got the NFT giveaway, so we'll have a look at that now. Right, NFT giveaway next, and as promised, we'll be giving away 2 of these NFTs. All you guys have to do, nice and easy, in the comments below, if you're new, I have subscribed, I've just subscribed. If you're already a subscriber, I'm already a subscriber. So you need to be a subscriber, and that's first and foremost. Just leave in the comments, I'm a new subscriber, or I'm already a subscriber, and we'll be giving away 2 of these at random on the show following that happening. So the ones that are going to be given away is going to be Baby Spider-Man, Crypto Bunny 253, Crypto Bunny 252, 248, Crypto Bunny 249, and Crypto Bunny 251. So those are the ones that we're going to be giving away when we hit 30 comments, and the comments need to say I'm a subscriber or I have just subscribed. I'm already a subscriber or I have just subscribed. So this one's going to be given away when we hit 750 subscribers, and that's a little bit more of a special one. And I just need to add that these are all on the Crypto.com blockchain, the Cronus blockchain, so you'll need access to a Cronus wallet for this. So let me just play this one for you. This is when we hit 750.
Wonder why everything's changed. Everybody want the same thing. Funny what they do for the fame. Everybody looking for somebody to blame. Wonder why everything's changed. Everybody want the same thing. Funny what they do.
So that's a bit more of a special one. Hope you like the show, guys. I just want to thank all our new subscribers, all our existing subscribers. If you're new and you like what we're doing, share with your friends. Give us a thumbs up. You're much appreciated, guys. Tomorrow we've got Altcoin Overdrive and we'll be covering Arweave. So stay tuned for that. We'll let you know exactly when that is. Hit the notification bell and you'll be notified as soon as that comes out. Take care of yourselves. Enjoy the rest of the weekend, guys. Bye now.